for
Thank you. It's
2025. I
really all
know
mine.
you came straight from the airport and you met with some traffic. I mean,
Yeah, I got stuck in Bangalore traffic a bit,
so
yeah.
would you say that Mumbai traffic is bad or Bangalore traffic is bad?
I think Bangalore beats Mumbai hands down, at least today.
Okay. I mean, but apart from that, I found the Kissht that what you're doing at the company is very interesting. And I think 2, 3 weeks back, I was looking at the commercial that
Yeah.
Sachin Tendulkar was part of it. So this credit space seems very interesting to me as well because I am also tried to be very credit worthy and try to keep checking my CIBIL score and everything. But as AI and ML are coming into the pictures, things are changing pretty fast.
Yes.
And it's companies like yours that are doing a lot in this space. So can you tell me a little bit about what exactly is the goal of Kisht and what
Sure.
you're building?
So let me set the context for this conversation, right? When we are talking of ML at the scale that we are operating, we are talking of speed and we are talking of scale, right? The journey for a customer on our app would, on an average, be around 8 to 10 minutes. So in 8 to 10 minutes, you have to collect all the data from all the sources, internal, external, provided by the customer, from third party. You have to collect everything, build your feature library, do the inferencing, and give a decision, right? That's the speed part.
Yeah.
In last 8 to 10 years, the models that my team has created have given some 5 crore positive decisions
Oh, wow. Nice.
and some 50,000 odd crores of disbursement. So we have seen things at scale, which means every problem that had to occur has occurred at scale.
Okay. Yeah.
So these are the two things which we are governed by, and of course, given that we are a profitable entity, something must be working in the model that
Yeah.
we are still able to deliver value. So I'm not going into the accuracy of the models right now, but these are the two guiding principles that we have, when we build the ML practice.
Okay.
Yeah.
So what is the role of ML and AI when it comes to this, like making faster decisions? Like the
See,
tagline of Kisht
correct.
is saying yes to everything, saying yes to loans.
So, a fast decision can be a random decision also. You can say that I've looked at all the data, but today I will say yes to all the decisions. But to make an accurate decision, and let me just step back a bit. So in lending business, the only line item which is probable is the risk cost, the credit
Okay.
cost,
Yeah.
right? And this is what is predicted and then realized. This is exact line item that ML controls.
Okay. Yeah.
Because the models that you build, the decisions that you give, will determine what the credit cost will be. So this is one particular area where ML sits at the heart of business. So for anyone to be a great data scientist in this phase, you will really have to understand the space, ML, and now even the regulatory
Yeah.
the
Yeah.
piece along with it,
Yeah.
right? Because it's a heavily regulated space.
Definitely, yeah. But still, a lot of companies are still relying on historical data, and they're not able to scale maybe because of that. So why do you think that is happening, and how is your approach different?
See, there are two parts to it. One is you need to have a stellar tech stack to deliver the speed that we're talking about. And then you need to have some ML capabilities. This is not one of those areas where you can say that, okay, fine, I'll get a consultant and he'll do something for me, because it is so core to you
Yeah.
that it will be driven by somebody at the top trying to build that practice
Yeah.
and delivering value. Otherwise, the confidence in this particular vertical will not exist.
Yeah.
For you to get a complete buy-in from all the stakeholders, it has to be, the buy-in has to be absolutely at the top.
Yeah, definitely. And this market is also moving so fast. I mean, fintech and the credit environment is
Yes.
also moving so fast. So how do you keep up with this volatility in the market?
See, when you talk about volatility, right?
Yeah.
One is the regulatory volatility, right? There are always some new guidelines which are coming in, so you have to understand those guidelines. You have to operate within those guardrails. Second is the industry changes, the customer behavior changes. So the way we think about the changes in our model is, one is the scale at which we operate, right?
Yeah.
My incoming population has to remain stable. Any blip anywhere, there is something changing.
Okay. Yeah.
Even in the alternate data, even in credit bureau data, there are sometimes you think, no, maybe this is just a change that's happening.
Yeah.
But when you dig deep, there's always a story.
Okay.
So For example, I think 1.5 years back, there was talk of, I think RBI started the conversation around leverage, for
Yeah, yeah.
example. Then we started looking at the distributions, and we found one line item in the bureau which said that the microfinance trade lines are increasing.
Okay. Yeah.
And then we dug deep, we looked back, and then we realized that, okay, this is the one particular line item which is increasing from last 2, 3 months.
Yeah.
And we need to be on top of it, whether we want to, what do we want to do with this? Are we okay with this increase, or are we not okay? So then we decided that we'll curb those exposures and all. But I'm saying that one is your own data talks to you. Second, you speak to the industry and to the credit bureaus, right? They also
Yeah.
have an insight in terms of what other lenders are experiencing at this point. So someone will say that in this particular geography, let's say there is some stress for collections, for example. So there's a lot of conversation that this industry keeps doing,
Yeah.
and everything that we hear, we go back and quickly test whether we are experiencing it or not.
Okay, yeah. And does your all these AI ML models that you're using, are they adapting quickly to the changes that are happening, regulations? And what amount of human intervention is still needed, or is it not needed at all?
So, again, we are in a regulated space. While I collect all the data, if I want, weekly, I can refresh my models, right? But there is an element of inferencing in your credit models, right?
Yeah.
Because I don't want my model to be echo chamber.
Yeah.
Every time I update my model, I want to know what happened to the customer that I rejected. So that makes it a requirement for me to go back to bureaus, to look at more data, to not to give bias. So we do these refreshes every quarterly. System can do it well and good, but there is always a sign-off which I look at the models, my team will
Yeah.
look at the models, even the business owners will look at the models. So since this is such a core, it will always have human oversight.
Okay. And does it also help in, creating more inclusion when it comes to giving loans and everything?
Absolutely.
Yeah.
If, let's say, 100 customers coming to me, if I only use credit bureau data, 30% will anyways be rejected because they don't have any history, right? 70% out of 70% will say that, oh, if I start thinking like a bank, I'll probably say the 3 are good, I'll give them credit.
Yeah.
But for the customers, so we do not equate lack of credit history with bad credit.
Okay.
If I don't get bureau data, I'm willing to look at banking data, account aggregator data, payment aggregator data. So I'm looking to give customer a chance to prove that he's creditworthy.
Okay.
Okay, so this is what leads to a positive decision in the areas where probably a bank would not want to do.
Yeah, definitely. And I was also checking with a lot of banks and everything, and the adoption of AI and ML is still, risky to some sense. But yeah, definitely it's happening. But what is the most unique data points that you look at when you're providing credit to someone? And how is it different when it comes to an ML model looking at those data points and human looking at those data points?
So I'll give you a very quick example. I think all of us are now aware of the real money gaming, right?
Yeah.
So some part of our customers, of course, since like someone like Dream 11 will have a 22 odd crores people on the app, there
Yeah.
will always be some overlap with that base with the customer that come to me. Most lenders, traditional lenders, won't look at this exposure one. But I would also not say that anyone who's on a gaming app, I might be on Dream 11, you might be on Dream 11, we might be playing, but there are other triggers which the data can combine. For example, what we saw in the data, that anyone with real money gaming exposure, doing a lot of transactions on top of it,
Okay.
and subsequently doing inquiry on the bureau, and sometimes maxing out the credit cards. That was a behavior, that's a financial behavior you don't want to encourage in your portfolio.
Definitely, yeah.
So similarly, you see same patterns for people trading in FNO. And the latest one, by the way, is the Astro.
Okay, yeah, yeah.
Yeah, so the customers who are first taking a loan and somewhere doing very heavily interacting with the Astro apps are also a bit,
Yeah.
behavior is a bit different, I would say.
So in practice, when you are checking someone's credit worthiness, can you share some more examples related to it? What are the other data points, any historical data that you look at?
See, one is the traditional bureaus that we'll see, right?
Yeah.
And I don't know if you know, but I worked with Civil TransUnion for a couple of years, and I was leading the team which developed their industry score. So I know how the credit score works, and you know the shortcomings of it.
Yeah.
So we have built, of course, we built our own credit score using the traditional bureau data. On top of it, we encourage customers to give us banking data in form of account aggregator. Again, that is traditional. Within account aggregator now, there are there are transactions. If you just look at data, there are banking transactions, but there is a lot of information on the behavior. For example, I can also figure out whether this customer is making trips to the wine shop.
Yeah. Yeah.
Yeah. So while you know it can pretty well be just a correlation and not a causation, but when you have such a large data set, you are always tempted to feed the model with whatever you can, and that becomes a challenger model for us,
Yeah.
right? That if I don't apply any lens of business, this is what my model can do,
Okay.
right? So that is the starting point, and then you start applying judgment to it that the models that you build should not fail business validations.
And so does this also result in a lot of false positives?
Yes, it will.
Okay.
I mean, like any other model, it obviously will.
Yeah.
So, like I said, we are quite concerned about our business is driven by how efficient we are, right? So when you say false positive, it is also a business loss in the sense.
Yeah.
So what we try to do is that the customer that I rejected, you have a hindsighting team. They kind of tell you that if a human were to look at this customer, what were the things that you missed? What were the positive signals that you missed? What were the negative signals that you missed? And that then goes to the data science team on why is it not appearing.
Yeah.
So it is almost like 50 cases a day will be looked at, and then the feedback will keep going to the ML team because they can also operate in their own silos.
Yeah. Yeah.
So the loop is always complete, and then we go back to credit bureaus to see that if we rejected a customer, someone else gave a loan, what happened eventually?
Yeah. You touched upon it a little bit, but how can you share more examples of how it impacts your business as well?
When a customer comes, right, the 100 customers are coming to me, whether I select good 10 customers or good 15 customers, that impacts the P&L, right?
Yeah.
Because I've already spent money to get that customer from marketing standpoint, and now you want to optimize your funnel to give the best credit to as many people.
Okay. Yeah.
So your models have to keep pace. They have to keep improving.
Yeah.
So, and how can they improve? Either you get more data, but I think we've reached a point where additional data does not add much value because of that scale we've reached some time back.
Yeah.
Then the point is you change the way you model, right? You add features, you add embeddings of other data sources that you get. So all this put together, the models have to keep improving for this team to still be valuable.
Okay. Yeah. So as you said that we constantly have to evolve the models and what we are working on. Can you share some example of where a traditional model that you were using earlier would have failed, but now the modern MLOps model are helping in that, enabling that?
Like I said, when I'm using a logistic or even a XGBoost, right? I mean, I'm as good as the team that creates the features.
Okay.
So there is some interaction, which of course they will keep looking for it. They are very diligent, but they will miss it. For example, when we are looking at a gaming customer doing n number of things, so there is multiple hops that you're looking at, right? So your traditional ML models can only pick so much.
Okay.
But we realized when we built our challenger model, the embeddings of the app data that we put in, that model was able to capture this kind of population much better.
Okay.
Right? So this is the delta that you're able to add to the model if you keep evolving.
Was there any case where the traditional model performed better?
Oh yes, there will be many cases because sometimes the bias of the kind of customer that I've approved keeps getting in, no matter how much I try.
Yeah.
And you have to understand the gravity of the problem by the fact that I'm only approving, let's say, 15% of the customers. So 85% are getting rejected.
Yeah.
So the bias of that 15% can keep building up very quickly.
Yeah.
Couple of wrong updates to the model, and model will start, uh, you know, figuring out something else. So what we do is we go back and go to the credit bureau, say that forget about what we underwritten. Give us 1 million data points,
Yeah.
and we'll create another model on your data, on industry data, something that is not seen in my population.
Okay.
So we apply that filter that fine, my model says no, that model also has to say no.
Okay. Yeah.
So we tried to break that bias because the positive decisions are so few that model, the bias gets, it's the biggest problem that the credit models face, that if you don't obsess about bias, I think give it 3 cycles and it'll be echo chamber for
Okay.
you.
Just one more question on that. So as you said that the scaling the data doesn't really improve the performance at this point. Why is that? I mean, increasing the
See,
data points?
like I said, 5 crore positive decisions. I mean, I can sample across years, and I can sample 5 million data points. And beyond that, I have not seen much improvement in models.
Okay.
If I increase the data series to years, yes, because there were some nuances in those years which would have changed.
Okay.
See, there's always this, the question whether you want to be married to the recent time or you want representation.
Okay. Yeah.
So the way we think about it is that while I want to be married to the recent numbers, I want some flavor of what has gone by as well.
Okay.
So
Yeah.
the way sampling will happen is that my 70% of population will come from last 1 year, rest 30 will be sampled from multiple
Yeah.
pieces.
Okay. So can we also dive a little bit deeper into your tech stack? And can you explain to me, are you building all these solutions from ground up at your firm, or you're also using some off-the-shelf products?
See, on the tech side and on the ML side, our DNA was always we are fintech, right? So we'd always started building everything on our own. But we have come to a point where we also understand what is core and what is periphery. So whatever is core, we will want to keep it to ourselves because we want changes very quickly. And whatever is periphery, for example, if conversational AI can make a difference in collections, for
Yeah.
example,
Yeah.
or calling customer service, we will not go out and start building those solutions
Makes
just
sense.
because we can do it.
Yeah.
Because our time is better spent solving the problem which impact you here and now,
Yeah.
right? So that lens we always apply. So for ML, we are completely on AWS, so we use the usual SageMaker, bias and weights and biases. So we use MLOps, but largely it is in-house for us.
Okay. I mean, that is an interesting thing because I think, as you mentioned, let some people build conversational AI tools and we can all come together and build on top of that. And so, coming to the business part a little bit again, there's always a need for rapid growth in every sector, in every
Yeah.
company. So how do you balance that need when it comes to responsible lending? And like you want to be at responsibly lend people. And,
See, we do try that there are no regional biases or no gender biases that creep into your model, right? And like I said, it is in our business interest to make our funnel more, inclusive.
okay.
In the sense that, fine, the customer has very little, imprint on the bureau. Still, look at see if you can justify the credit cost on basis of something else,
Yep.
then something else. So, when we increase in scale, the complexity will increase for us, but we are still looking for additional data sets to make the whole thing more inclusive.
So do you think using all these AIML solutions, does it help in reducing all these risks?
It does, it does.
Okay.
And see, since we are in a regulated space, every once in a year, I will have to sit in front of the regulator and explain what I'm doing.
Okay. Yeah.
So that always, that vantage point helps you to evaluate your model when you're building it,
Yeah.
right? Because you also know that it has to be explainable and it has to make business sense, right? If my model, for example, says that the customers who have not paid in the past are great customers, right?
Yeah.
That doesn't add up. So I'm saying that because of the space that we exist in, we are still grounded in the business realities.
Okay. And so one of the most interesting topic that I want to touch upon is the fraud part. I mean, there's always a risk of fraud, especially in this industry. So can you share some case where your model, your AI/ML model, was able to prevent fraud?
See, I mean, fraud sounds very Sherlock Holmes, but
Yeah.
it's not quite in the business in business reality. What happens is that there is the range, right, from white to black. And when we look at signals, even before the credit underwriting starts, we have the device triggers with us,
Yeah.
and we have where the customer is logging from, what is adding up, what are the anomalies that you see. So the model will say that there's a red, there's an amber, and there's green. So
Okay.
green gets a great, red is out, green is this thing, and the amber one will probably have to give more data than this thing. So it's very boring. I mean, it's not as if,
Yeah.
there'll be one inside that will come through. But what we have seen is in our digital lending space, the device-related anomalies is what drives the extreme behavior in
Okay.
small portfolios that we see.
Okay. And so as I was looking at the company and the profile, I see that there's a lot of repeat customers on your
Yes.
platform. So
Yes.
what is it that your company is doing that the other banks are still not able to do?
See, one of the things that once we are sure of the credit of the repeat customer, we give a garden path,
Okay. Yeah.
right? I'll give the best offers, best, the tag for that journey will be even lesser. The customer will see that this is what is available to you. Come, just take it, and it's done, right? Because our business, our P&L is built on these customers who keep coming to us. And I would be lying if I say that they don't go to other banks because there is only so much we can do. So now we've also started partnering with banks, saying that this set of customers, they are great customers, but my cost of fund is so high that
Yeah.
I can't give them a loan at 11%.
Okay.
So if you
Yeah.
want to service them, I'll pass it on to them. So I do these arrangements as well, where I know that I can't service these customers. But having said that, I do lose customers to all banks and BFCs because now they've proven their credit. Now everyone wants them.
Yeah, makes sense. So also, as you can see, the younger generation that is coming up right now, the Gen Z and the Gen Alpha, a lot of people are now using the buy now, pay later model a lot. Everyone is buying iPhones on EMIs, and so how do we mitigate the risk that comes along
Yeah,
with this?
yeah, this is interesting. So this is one behavior which is what you want to curb. In very traditional lending also, they do it on a pen paper way also you can do it, on a very large scale also you can do it. So there are a lot of signals in data to say that, fine, this customer is closing somewhere, opening, it is in some debt cycle. And it is a time bomb waiting to happen. You can go back, test as much as you want, and we've seen that. So we were so obsessed with finding such customers because in our segment, this is what
Yeah,
will burn the entire portfolio if not done well. So we not only try to identify the customer on today's behavior, but we have built models to predict that who's the customer, given the past behavior, given the past patterns, will go on and become one.
okay, yeah,
And so we try to balance out extremes. This customer on some count has shown extreme behavior. Combined with everything, oops, this
yeah,
is not adding up. So
yeah. Makes
we do obsess
so
about this problem.
using AI and ML, has it helped you increase in identifying this?
Of
Or,
course. I mean, you can't
yeah,
do it otherwise. I mean, how
yeah,
else do you
yeah,
expect someone to put a pen and paper? See, I'll tell you what will happen. All models combined, we are using some 800, 900 features. If someone was to say yes, no, based on 800, 900 features, I can tell you the eventual approval rate will be zero, right?
okay,
Considering that we are still approving customers and we are doing reasonably well, and not just us, the entire financial services, since the longest time, has been using some form of, now we can call it logistic, you can call it a decision tree, but it has evolved.
yeah,
But it has one of those early adopters of some form of machine learning.
yeah,
And fintechs have better DNA to build on it. Banks can be slightly slower than us, but I mean, this is one sector which sees value in it.
Okay. So Neha, those were all the questions I had for now. I'll open up to the audience, but
Sure.
just one last question. I think there's a lot of people sitting from banks here in this hall as well.
No
So,
offense meant.
any advice or AI ML advice that you would want to give them so that they can also move fast, maybe?
Yeah, I mean, the data scientists, the young data scientists that I work with, they get supremely excited about the newest technique that they can use, but, and I sometimes feel that people are more interested in technique than the data or the customer.
Yeah,
That doesn't take you too far. I mean, you really have to be interested in the data that you see, the story. You should know the story before you go out and find it. And that's when you start connecting the dots. Without that, if you don't connect the dots, it'll be one model over another. You will never be able to figure out that where does the problem lie.
yeah.
So I really feel that this is one thing which I try to at least inculcate in the team, that please understand the customer, the segment, the business, the P&L, everything before you deep down into the next fancy model that you want to pick up.
Definitely, yeah. Yeah, thank you so much, Neha, for your time, and
Pleasure's all mine.
it was lovely and very insightful talking to you. If there are any questions, we would love.
Thank you, Neha. It was an amazing and engaging conversation. So, incidentally, I come from a bank. Okay. So, I have just one question. See, you spoke about the approval process, right? The time that it takes to go through the whole life cycle and then reach at a credit decision, right? So, which I believe you still have 8 to 9 minutes or 10 minutes to
Sure.
do that calculation. What I'm more keen to understand in this competitive world that we are now, right? You book a cab, you get an offer for a 10 lakhs of a loan, right? You order something from Zomato, they come back and say that you can take a 5 lakhs loan, right? So with all this happening at the same time, how do you look at your acquisition channel? What makes it difference for you to get that confidence to the customer or get that first mover advantage, right?
Sure,
Once
sure.
there are so many players out there.
See, what is different about us is one of the channels that we operate is, of course, digital marketing. The other channel that we have is the merchant acquisition channel, right? Where we have active merchants who have our credit QR pasted on their shops, and customer just walks in, takes a QR, and the journey starts. Now, in different segments, right, different things can work, and this is one channel which gives us roughly 30 to 40% of the volume that we do. So this is the moat that we have created in last 4 years, that our acquisition, despite everything, continues to be steady. So it is online plus offline mix that we have.
Hey, Neha. Hi, Neha. Here. Here.
Sorry, yeah.
Yeah, I'm Rohit from PayPal. So my question is regarding. So you told me. I mean, you told us you would take a decision on 8 to 10 minutes based on the customer's data with traditional CIBIL score and other data. So you also mentioned you would use Dream11 if the customer is a Dream11 customer, or like they're using any other apps. Or so why would some other apps would share their customer data to you, like their gambling behaviors, or like they're using poker apps or any other things? Like why would different entities share their data to you?
Sorry, I think you misread.
Yeah.
What I said, even in your bank statements, right? I can see whether the transaction was made through on Dream11 or on a poker site. I can read those transactions.
Okay, okay, okay.
One part is that. Second is when the customer comes on the Kissht app, the customer agrees to give one-time access, consented access for certain data sets, right? Which includes your app data. So we access what apps is the customer running. Now, just having an app is not enough for me. So the app data combined with what you're doing in your banking transactions is what helps me make a decision. So
Okay.
it's not that the third party is sharing the data with me.
Got it. Got it. Yeah.
Hey Neha, on your left, I guess, this way.
Oh, hi.
So you just briefly touched upon BNPL and EMIs, right? In the current world, I think the banks are actually gaining.
Sorry, I just want to correct it here. We don't do any BNPL product. We do loan products which are 6 months or more than 6 months. So just for correction.
But I wanted to get your thoughts on it, right? the banks are earning actually money from BNPL as well as EMIs. So in order to discourage that type of behavior, if we want to discourage, what could be the ways wherein we can go ahead and discourage? Because banks are making money, they will try to push it, but that is not the ideal way, or a ticking bomb, if I were to put it.
Isn't the credit education a better way? I mean, any adult should be educated enough on the financial planning part, right? They should know how much debt to what end is good, right? Whether it's you're just a fancy purchase or you are using it for your business. I mean, it's part of credit education. Pushing it from a regulator stand or a bank stand, I don't think, at least I subscribe to that view, that there has to be an intervention, there has to be an education, right? That when the customer is, for example, accessing his credit bureau, he should be conveyed that, you know, you're running too many loans. Maybe you don't want to take another loan, right? So at right touch points, you need to educate the customer on the best credit behavior. But I do not subscribe to the view that, you know, just because someone is making money out of a need. Nobody is pushing anyone to, take a loan. So my view would be, personal view would be, that it has to heavily come from either from the regulator or from the industry bodies, that how do you educate people on what is the right amount of debt that one should take? And by the way, anyone taking excessive debt is not good for the lender itself. So that is beyond proven. So it is in everyone's interest that the debt is to the right level. But again, I would not comment on, you know, who's making money out of which transaction. Yeah. Thanks.
Thank you.
I think we can take one last
Yeah.
question.
Hello. So I have a couple of questions. First is that, have you used any social media data in your models? If you have tried, what sort of, do they really kind of impact your models? That's one question. Second is that you talked about kind of when you accept a customer, you basically roll out offers and all. But do you try to control the risk by, say, either by giving, either starting at higher prices and lowering it down once the customer, and you see good behavior from the customer over time, or you control the exposure, and then later on you kind of increase the exposure, like once you start seeing better results from the customer?
Okay. So the first question is social media. I think 2019 onwards, I have not seen a lot of social media data being accessible, right? I think last was Facebook and LinkedIn used to give you some data. I think the closest I've come to using any data beyond what I'm using right now was the contact call log data, which used to be there. And I can tell you, my hands and legs for that data, because it used to be so useful to figure out which delinquent customer is connected to whom, where do you draw the line. Having said that, in, I think, middle of 2019, we gave up our permissions for those on Google Play Store, because we thought that those were the data sets which were also liable to be misused. So we thought that, you know, just to be on the safer side, we have not accessed that data ever since. And again, it was extremely useful from a credit and a fraud standpoint. To your second question, we do both. We truly value the customers who are coming back, because you know, one, that the customer has a proven track record. The customer, even though has a proven track record, will still have to prove creditworthy. And then, like I said, we will roll out a garden path in terms of exposure, in terms of pricing and offer.
Okay, so I think those are all the questions for now. Neha, will you be available outside
Yeah,
for all?
absolutely,
Okay.
absolutely.
Thank you so much for your time, Neha, and
Thank you so
lovely
much.
talking to you.
Lovely.
Thank you so much.
Thank you.